Stephen Carter joins us now, the CEO of Informa. Stephen, thank you so much for joining us today.
It's all great to be here.
I was just at a mega conference yesterday in Barcelona, and to me it felt like it was bigger than ever before in terms of conferencing. What are you seeing in some of these trends?
Well, we'll forgive you, it's not one of ours, but nevertheless, no, generally the market is very buoyant. I don't know, combination of expansion in lots of countries around the world, which we might talk about, and people have a real deep-seated desire to be there face-to-face, transact, particularly in technology, because I'm assuming you were at MWC.
Exactly.
And that market is really is experiencing hypergrowth, particularly in AI, but also in a whole range of other areas.
To that point around trying to figure it out around technology, to me that's what it seemed like everybody was doing. There are so many announcements. It was DeepSeek at the start of this year, Stargate as well, the European initiatives, and now we're talking about Alibaba today. It feels like everybody's trying to figure out what's happening, and that the easiest way to do that is to have many conversations with people and see what they're up to.
Look, the power of big events, of which we have a few hundred in our portfolio now around the world, is the industry meets, the industry convenes. All the buyers, all the sellers, all the component providers, all the distributors, all the analysts, all the commentators, and that's a very rich and productive environment. And in a dynamic industry, of which there are many, but technology is an obvious one, it's very efficient, it's very effective.
Stephen, you asked, and very nice to see you, by the way, you asked about whether we were going to ask you about geographic regions, and absolutely. And so where are you? I mean, I know the Middle East is hot, and I know places like Singapore are hot as well. I'm hot-footing it to a big conference there, CNBC one next week. But in terms of if that's what you're seeing, Middle East and Asia as a driver at the moment, I'm fascinated to know.
Well, geographically, our top three markets would be the United States, Asia, and then, as you say, the GCC, the Middle East, that kind of growth corridor into Southeast Asia. Those would be our top three markets of real scale, all growing, in high single digits or double digits. There's new capacity coming into those markets, either new venues, new airports, new airlines. Market expansion, GDP growth numbers in those parts of the world are mid-single digits or higher, and that's a very fertile environment for our products and services. We've also just announced today an extension in a partnership with the government of Dubai, whereby we're creating a combination between our business there and their business there to create a new company, Informa International, which will give us further platform scale in the GCC.
Amazing. I've got to focus on the US as well. I get what's going on in GCC, and I get the Asia story as well. The US must be tricky at the moment to work out what's going on, given the extraordinary news flow we're seeing from the White House at the moment as well. Are you seeing any signs that that is acting one way or other to affect your business and the world you inhabit?
Today, no. I mean, our business operates, as we say, we're not oblivious to the macro, and nobody is, but our business operates in the micro. I mean, we operate in dozens of market specialist categories. We service markets, and in those markets, we focus on the supply chain, the buyers, the sellers, the distributors. And actually, our business forward books, so you get quite a lot of forward visibility, and our forward booking visibility is strong. So in the categories we're operating in the US, and indeed in the rest of our world, no, we're not seeing that disturbance.
So that's now, you've been around as a regulator and advisor to governments as well. In fact, were you in the last government? I can't remember. You were briefly, weren't you?
A few governments back.
A few governments ago, yes. So you've been in government, you've been in regulation.
I'm older than you're suggesting, but keep
You look good on it, Stephen. But in terms of your thoughts about what is happening now and what it could mean for the world and your centre of focus as well, I'd be very interested to know what you think.
Look, I'm a humble business executive trying to run a company that's doing well. Look, the macro is complicated and complex at the moment, and there are changes, there are shifts going on in alliances, relationships, macro institutions, and hard politics. What does that mean for businesses? It's a bit unpredictable in the macro. So you've got to be really close to your markets, you've got to be really close to your customers, you've got to be really close to your products. And that's actually what's serving us well. Yeah. That's really what's serving us well.
Yeah. Can I pick up on that point about being close to customers? Because to me what stands out is that you also extract a lot of data these days from people attending conferences. What do you do with that data?
Well, we collect it with consent, first of all. We do, you're right, Karen. We collect a lot of data. We set up actually in the middle of COVID when no one was allowed to meet anyone. So we were investing in our digital technology. We created our own, in the jargon, CDP, customer data platform, which we call Iris. And we collect millions of data fields now, anonymized, consented. So we're not, disclosing your data to anybody else. But it allows us to have a really accurate level of segmentation to one of who's attending, why, where they're going, who they're meeting, what they want to see, what product categories they're interested in. And that just allows us to make our products more and more relevant and more efficient for the people who are either exhibiting or who are participating.
Here's an AI question for you. It's something that struck me this week. I was talking to someone from a delegation from one country in Europe, and they said to me, look, the problem with this landmark legislation that Europe is very, very proud of, GDPR, that they hope that everybody else would pick up and run with and implement in their own countries, is that limiting now around AI, because the amount of data you can keep and how long you can store it for, having well-trained, successful AI systems requires a ton of data. And Europe may, in fact, be limiting its ability to train AI systems now because it doesn't have as much data as, say, China and the United States. What do you make of that? Do you think that's true? Is GDPR going to be an issue for training AI in Europe?
That is a great question. Here's my, I'm expressing a personal view, not a company view here. AI, if we're in the knowledge business, you're in the knowledge business, we're in the knowledge and information business. There's going to be a time dividend coming as a function of AI. It's going to take 20–30% of what you might call process workflow out of knowledge businesses. Standard cognitive processes will be automated. So that's going to free up a lot of time. That time is actually very valuable. What do you want to do with it? You want to make your products and services better. To do that, you need to feed off data. So data is going to become increasingly important. My own view on the broader European regulatory framework, slightly back to Steve's earlier question, is that there's going to have to be a bit of a reset.
I want to go back into the buyback actually as well. I'm just taking a look as well. £200 million plus buyback in 2025. What's the catalyst for that rather than... I mean, I know you're investing in the business. You mentioned the Dubai deal as well. But what's the catalyst for a buyback at this stage?
Well, look, we've just come off in 24. We're posting our annual results today. We've posted 11% growth, 20% plus profit growth.
Yeah.
We're taking our dividends up by 11%. The business is back in high cash generation. We did nearly $1 billion of profit last year. And our cash flows are equally or over $1 billion. So the company and the balance sheet is strong. Our shares, for a variety of reasons in our judgment, still are very attractively priced.
Okay.
And therefore, it's an efficient use of our cash.
Yeah.
And it allows us to get a good return on that, alongside leaving us some organic capital for future investment.
Let me ask you a very basic question, and look, I think it's a question for everyone watching as well, because as I say, we've got a lot of CEOs watching. Do you hate buybacks? I just think they kind of seem to me quite random whether they're in the or out the money over a medium term as well. Your stocks rallied from those pandemic lows from about £3.60 or something around there. You're over £8 now. You could use that money. You're growing a great business. I know you're growing double digit already, and all those points you just raised as well. Can't you use the money better than a buyback?
I mean, there's a philosophical question. The practical question for us, we pay a dividend, a handsome dividend. But
it's a good divvy. It's below the FTSE average.
We pay a good dividend,
Yeah.
but ours is a growth business. We're focused on growth.
Yeah.
We are putting in a minimum buyback commitment, but at a level that we can afford.
Yeah,
and that still leaves us significant cash flows to invest in the business organically and inorganically. So it's a balance. We would say it's a balance.
Fair enough.
Can I ask you more broadly about the UK? There's been a lot of discussion about listings here.
Can
and
I
whether...
just jump in before you say it was? I can't believe it. I was so wrong. I was trying to work out when was Stephen in government. I had to look it up. January 2008, he joined the Gordon Brown government.
Oh, the fun
as well.
times.
So you are younger than you look. Of course you are, Stephen.
It wasn't like it was a roller coaster on markets back in 2008. Or,
Nothing going on there, was
No,
there?
it was quite a bit of a quiet year, actually.
Quiet time.
But Stephen, there are questions about whether the UK is an attractive destination at this point. You've got a number of companies upping and leaving. There's pressure on both LSEG, on the government, to try and do something to make it look more attractive here, compensate CEOs, allow those who create businesses to have more incentive and not hand over the keys to shareholders. How do you think the attractiveness of the UK is in 2025, and is there work to be done here?
Well, look, I'm biased. I live here. The company's domiciled here. We are now a truly international company. In many ways, I would say, without boasting, we're a bit of a showcase for start a business in the United Kingdom and internationalize it. Now the UK is less than 2% of our revenues, 2%. We're a truly international business, and we've done that from this UK base. Why? It's a great location, great language, great time zone, great capital markets, great legal system. But the world's got more competitive. There are other locations that have looked at that model and said, we'll copy that. So the UK's got to be on its game on attracting talent, attracting capital, retaining companies, retaining capital, and bringing new investors. Is that possible? Very possible, but we need to do it.
Are they doing it?
They're doing some of it.
What are they doing wrong?
I don't know if they're doing anything wrong. It's a fresh government. It's a new government. There's a lot, as we say, there's a lot of macro change. But look, in that sense, government, is a bit like business. You've got to take some risk.
Yeah, brilliant. Lord Carter, thank you very much indeed for joining us. It's always a pleasure. Thank you so much indeed. And I can't believe it was 17 years ago you were in government. Seems a long while ago.
Obviously very young then.
Obviously very young, yeah. Lord Stephen Carter, CEO of Informa.